I think we have Pankaj Tibrewal, founder and chief investment officer at Ikigai Asset Managers, now joining us. So let me welcome him in. Pankaj, good to have you with us here. Quick thoughts before market open. So got about 90 seconds. What are your first thoughts, reactions to the strike, and what does it mean for markets from here on?
So Prashant, we all expect it to be a measured and a calibrated strike. And over the last decade, we had two instances in a smaller manner like this. One was the Uri, and the other was the Pulwama, and market took it its own stride. But the larger one was in 1999, if you remember, May to July. Market saw a 10% drawdown, but eventually we outperformed MSCI. The MSCI India outperformed by 30%. So actually, towards the end of Kargil war, actually markets did well. So we have to see how it escalates. Initial knee-jerk reaction could be negative, but I think it will be a great opportunity to increase your equity exposure. And we'll discuss what are the 5-6 reasons which are making us positive from a medium to slightly longer term outlook on Indian equities.
Let's get in Nilesh Shah, though, founder and CIO at Envision Capital, who joins us on the show. Hi, Nilesh. Good morning, and thanks a lot for joining in. Well, for the time being, just looking at the screen, it appears the street wants to look ahead. The geopolitical risk for the time being appears, that's settled down. And now the uncertainty is behind us. Would that be the way you're looking at the markets from here on? We get back to looking at fundamentals. Trump's tariffs have been digested, and now, in fact, maybe part of the geopolitical risk as well is behind us.
Absolutely. Clearly, the geopolitical risk is behind us. The uncertainties probably come to an end, though there'll still continue to be a few developments going forward, as there will be retaliation as well, or there could be retaliation as well. But clearly, from a market standpoint of view, the uncertainty is behind us. And markets are going to be back focusing on fundamentals, earnings. India macros have never been as good as they are today versus what they have been over the last maybe couple of years or so. So I think on the whole, uncertainty is behind us. Macros are getting better, and fundamental earnings kind of continuing to be very, very stable. So I think on the whole, continue to be very, very positive.
Nilesh, hi, good morning. Let's just talk about the India-UK FTA and any portfolio companies for you which get a leg up, bump up.
Absolutely. The Alcobev space clearly benefits from this FTA with the United Kingdom. At one level, United Spirits, which we own, clearly is going to be able to import at a lower price. And therefore, that should basically drive a bit of its margins. But more importantly, local players who have in the high-end segment where premiumization has been a kind of a theme or a growth driver for them. Companies like Radico Khaitan, which we own, they will basically also benefit as they will get to import basically the Scotch at a much lower price. So that will also improve their margins. And I think they just announced their results yesterday, where they basically announced a very strong double-digit revenue growth and margin expansion. So I think alcoholic beverages is a space which anyway I think has been on a very, very strong footing with domestic demand and premiumization. I think it stands to very clearly benefit with this free trade agreement with the UK.
Okay. By the way, just looking at some of the updates our colleagues have been sending in. So while the strikes are done, we need to see what's happening along the line of control. And there, the reports on civilian casualties, heavy shelling, all of them are still coming in. Nilesh, hi, morning. Good to be getting perspective from you today. So from the market standpoint, how should we be reading? Because the mix is getting only thicker and thicker. There's local geopolitics. We need to see what the Fed does tonight. Chances are they'll do nothing. They'll remain, steady on rates. And there is this potential trade thaw between China and India. So would you expect the market to significantly move higher from here in the coming weeks and months? Or do you expect more consolidation after the April rebound?
Well, there could be some consolidation, given that we've had strong up moves in March and April, especially from the lows of February and early March. So clearly there could be some consolidation, as undoubtedly there is a lot of noise in terms of what's happening globally. So that's something which could ensure that the markets will have probably some up moves and maybe some kind of down moves as well. But on the whole, after this up move, expect it to be basically now range bound. Maybe a couple of months from here could be time zone of consolidation. And as corporate India stands to kind of benefit from lower crude oil prices, lower interest rates, I think all of that will begin to kind of get reflected in their margins. In addition to that, the rural economy has been buoyant. Urban is expected to bounce back with lower interest rates. A couple of important developments which happened in April around manufacturing, where the demand for jobs under Manrega actually declined after 6 months, and manufacturing activities at a 10-month high. These all augur well and point to essentially the times ahead. So yes, there would be consolidation, which I believe would be healthy from a medium to long-term direction of the markets.
Okay, absolutely. We, of course, have Pankaj as well, who's been waiting by while we were reading all the rates. So thanks to both of you. Very important morning, and we need the right perspective. So Pankaj, going back to this, and okay, let me get down to defense. I'm not saying it's linked to today's developments, but in general, when we talk about the rebound through April, defense has been the best performing sector. I was looking at the Nifty Defense Index. It's up about 11%. Now, I don't know how much was sentiment in this anticipation, how much is reality. Orders are coming in. Operational performance has been looking good. Pankaj, would you play that space? If yes, how?
Surabhi, yes, I think defense has been a strong performing space, not only because of the Indian geopolitical situation, but what is going around the world. And it's very surprising that till a few years back, India was the net importer. And nobody ever visualized that India will also start exporting defense equipments. And if you look at some of the companies in the private sector, they received the order from the government later on, but their export order book was quite healthy, which means that India can, over a period of time, become an export hub in many of the defense equipments and ammunitions. So yes, clearly you have to be very stock specific, but be very mindful of the fact that in many defense companies, the regulator, the customer is only one, which is government. And there the business risk is always high. So you need to buy at a reasonable valuation. Make sure that you don't overpay for some of those while getting flowed in the narratives.
Pankaj, another space you've liked is auto ancillaries, right? And you've liked it for local reasons and auto ancillaries for non-auto reasons. But there's also this leg up to those players, understandably, because of the India-UK FTA. Of course, one will have to be selective in terms of who sells there, etc. Any thoughts there, Pankaj?
So, Prashant, our thought is that there are many auto anchors in India which are pivoting themselves from pure auto anchors to non-auto also. And recently, we happened to visit a few of those companies in the month of Feb and March. And what we were surprised on the shop floor to see many global customers around it. And when you speak to those global customers, and these are large multinational companies, they say that you had a vendor base out there in Europe, some in China, and their longevity is in question. And we want to have a couple of suppliers, whether it be aerospace, defense, or semiconductors, from India who are good in precision engineering. And many of these companies are very good in metallurgy, very good in cost competitiveness and quality benchmarking. So we believe that over the next 3 to 5 years, many companies will pivot from pure being auto ancillaries to non, because their precision engineering is quite good. And we are quite positive on few of them. Their non-auto component may be 5-10%. But over the next 3 to 5 years, we believe that that component could move to 30 to 40%. And hence, the cyclicality of the auto would be a little bit arrested. So I think that's the way we are looking at few of the auto anchors in India, which will have the opportunity to participate in the industrial part of growth.
No, absolutely. Pankaj, well explained. Let me actually welcome in someone who you know very well, your ex-colleague, ex-boss. Nilesh Shah is with us, Managing Director at Kotak Mahindra AMC. Nilesh bhai, good morning. Good to have you with us here. We are speaking with Pankaj Tibrewal, and we have Nilesh Shah of Envision with us as well. What is your sense, Nilesh bhai, on the strikes and whether just looking at the market, the collective wisdom seems to suggest that expectation is this is it. It's been done responsibly. The statement from our side is that it's calibrated, aimed at military and terrorist infrastructure. Would you go with it, that no escalation and this is it?
So as a patriotic Indian, undoubtedly, Pakistan deserved a harsh response. And at least this is a beginning. From a market point of view, clearly the global support is with India. I believe in one of the news briefing, US has warned Pakistan, don't even think of retaliation. So hopefully Pakistan will realize that they should not escalate with a bigger country like India, which is far, far superior to them. The market obviously is right now looking at UK FTA. It's a deal which is truly amazing. It will open up many of our companies to cater to UK market. Normally the reaction post a conflict will be negative for the market, but I think the positive opening is obviously driven, one, by the fact that we believe this conflict will be limited. There will be no escalation from Pakistan's side. And second, the UK FTA deal is truly remarkable for Indian economy.
So, Nilesh, good morning and great to have you on. The market seems to be marching ahead. What's the sense? I mean, then we get back to asking more basic questions. Let's just for a second, expect or hope or assume or pray that this is contained. We've done what we had to do, and then now there is no major escalation. Then we go back to asking the more regular questions about valuations and earnings, Nilesh. We're also coming to the fag end of the earnings season. From that lens, how does the market look now?
The earnings season surprisingly has been quite okay. So far, about 100 odd plus companies have come out with results. And it is little above expectation from a collective point of view. Now, normally good results come first, bad results come later, so things can change. But so far, the earnings season is ahead of expectation. We should be ending Nifty 50 anywhere between 1,050 to 1,060 for FY25. The second thing, many a times on CNBC studio, I have mentioned, "Subah ka bhula, sham ko ghar laut aayega." This was in the context of foreign portfolio investors who were selling India between October 24 to March 25. They have started.
Nilesh, sorry, Nilesh, you always put it so beautifully. Subah ka bhula, sham ko ghar to aaya. But abhi wo wapas jayega kya? Given the geopolitical issues and the fact that there is a China-US trade deal perhaps in the works finally. Could that be a risk?
सुबह का भूला दोपहर कोई घर लौट आया तो अगर वो निकल के गया तो भी शाम तक तो जरूर
शाम को आ ही जाएगा. Got that point.
We could never anticipate FPI buying during this kind of conflict season. And it's not that this was unknown. This was known. So clearly it is the flow-driven market right now. FPI buying has pushed our market up. Domestic flows have been strong in the month of April as well as first few days of May. Put together, I will say we are a fair value market. Earnings season is little ahead of expectation. And flows have been strong. And it is the flows which are driving the market.
Nilesh bhai, all the question is I'll go quickly, like a rapid fire. One sector which you're most bullish about, Nilesh bhai, your team is most bullish about.
You take an easy route, whatever Pankaj says.
Nice one.
Pankaj is smiling ear to ear. No, I'm not going to. I know what Pankaj is bullish on, auto anks, and I think we spoke about a bunch of other areas, but banks, Nilesh bhai?
So on the banking side, clearly we are seeing that there is a differentiator coming.
Yeah.
Some banks have been able to deliver better results. Some have not been able to deliver better results. So focus on banks whose credit quality is good and whose liability franchise is strong.
Okay, got that. Nilesh bhai, thank you very much for joining us. Good speaking with you and good getting that perspective. Nilesh, the other Nilesh, this is to you. Same one.
The same question, Prashant?
Yes.
I'd probably say take three sectors. One is essentially home finances. I think they will benefit and you're going to see some step up in demand. Second is alcoholic beverages, and third is payments. I think these three, according to me, would be standout sectors or opportunities.
And I think we've discussed some picks from each of these spaces earlier on as well. Pankaj, we already got yours. So thank you very much, Pankaj and Nilesh, for joining us. Shorter conversations today, but we've got a big earnings track lined up as well. So let's get to it. I think